Hello everyone and welcome back to the channel. In this video, I'm going to explain to all of you what is a proper trade entry simulation, okay? And of course, we're talking about here the cash secure put strategy. But of course, you can use this for debit spreads, you can use for ratio spreads, you can use for the covered strong, you can use for the covered call, and so on. Okay, because of course the concept doesn't change. What's going to change here maybe is some things in relation to rate of return, annualized rate of return, and so on. But the concepts, the thing that anyone should take in consideration before pressing the trigger when it comes to trading options, especially if you are an option seller, it doesn't change, okay? And I'm going to make this spreadsheet available to all of you to download for free at the description of this video. So should be by now, if you are watching this video, on the first link below, you can just click and download for free, okay? Because I want you guys to use, of course, use at your own risk. This is not financial advice, this is just education purpose only. But I'm gonna explain to you guys these things here and how crucial it is for us to understand, especially for us option sellers. And all these things you can find, guys, on this PDF. Okay, all the examples, it is placed all the way down here. If I scroll this thing all the way down here, we have the example that we're going to use now, which it is the trade on IWM with the strike price, stock price, delta, all the good stuffs, okay, the outcomes, when the trade goes in the money, out of the money, all those sort of things. And you can also get hold to this post, okay? You can read, you can compare it to your trades, you can change the numbers, you can simulate these things around, what you're gonna do when the trade goes in the money, out of the money, and so on. All these things for you guys to understand. And for those of you as well that wants to learn how to trading options, don't forget we have our playlist, which it is stock option for beginners from 0 to hero. If you haven't pressed the trigger yet on one single trade when it comes to options, guys, you need to learn this thing here, and it's free, by the way, okay? All the things, it is on the first link on the description below. And this video, it is in relation to this content here that we placed yesterday, which was learn my $500,000 cash secure put strategy, okay? Because this thing here, it is a reflection of that spreadsheet, and I'm gonna show it to you guys. Because the reason why I managed to make all this money last year, and by the way, guys, this is TastyWorks. TastyWorks do not offer paper trading, and I don't do paper trade anyway, and I advise anyone to do paper trade anyway. That's the silliest thing ever. Okay, I'd rather to lose $100, real money, learning real thing, the real feelings of a trading, than wasting your time on simulating trading. Okay, anyway, so you guys get the point. It is just illustration, this thing here, which it is learning my 500,000 cash secure put strategy. Okay, because all the trades, it goes through this thing here that I said to you guys, which it is the simulation to see if it meet my requirement. And I picked this trade here on purpose to show you guys what these things mean, because these two numbers here, it is the golden goose. Because if these things here doesn't match my entry requirement, guess what? I am going to press the trigger. Okay, if it do meet my requirements, I'm going to press the trigger. If it doesn't, I ain't gonna press the trigger. Why? Because I'm not gonna sell here, guys, a cash secure put option with annualized rate of return of 8.96. No, thank you very much. Appreciate, but give that to someone else, okay? And of course, I'm gonna explain to you guys here at TastyWorks. So basically, without any further ado, let's get on to the video. So the first thing first, we're gonna come here to TastyWorks, okay? This is the broker that I use myself. You guys can use IB, Schwab, Robinhood, whatever that might be, all right? What we're gonna do is we're gonna start here with in the Excel is 43 DTE, but today, of course, one day pass, it's 42. And again, all this strategy, it is in detail on the Word document you can also download, all right? What we're gonna do is we're gonna go all the way down here. We're gonna sell here at $200 strike price. Okay, remember, this is our strike price. For those of you who doesn't have a clue what I'm talking about, this is the date of the expiration of this trade, which it is in 42 days, and this is our delta, which is 18. So basically here, guys, we have 82% probability of profit. That's very simple. Okay, what we're gonna do is we're gonna click here sell. We're gonna click mid price. We always get filled at the mid price. We're gonna sell one contract to expire on 22nd of November, which it is 42 DTE. Our maximum profit, of course, option sell is gonna be always equal to the premium multiplied by 100. Our maximum loss, it is if the stock goes to zero, which it is our strike price minus our P. In this case here, which it is $200 minus this thing here, and it goes to zero, we lose 19,796, which it is $20,000 minus 204. And of course, this is the broker requirement for us to press the trigger in terms of margin. Okay, very, very simple. So this is our entry parameters for this trade. Okay, our deltas, which are strike price, our DTE, our ticker symbol IWM, which is the ETF that tracks the performance of the Russell 2000. We got our pop here. We got -1, which it is a short put. Of course, if it was a long put, it would be a 1. We got our premium, max profit, max loss, and buying power requirement. That's all you need to know. Okay, delta, theta, theta, it's okay, but this thing is changing on a daily basis. Main thing here, it is your delta, okay? And by the way, if you want to learn why I'm picking this delta, all those kind of stuff, go and watch that video that I just said to you guys, okay? You're going to learn exactly how to press the trigger when it comes to cash secure put and the things you should take into consideration. But now, back here to our spreadsheet. Let's see what's going on with this trade, okay? Remember, we had ticker symbol IWM. Of course, we're going to use here TastyWorks. You can have a drop down here, guys, like this, for example. Okay, I have IB, TastyWorks, because I do have a big account, a large account on interest rate brokers, okay? But anyway, we got our ticker symbol. We got our broker here. We got our entry, which it is 11th of October 2024. Our expiration date, 22nd of 11, 2024. The stock price at the time that I can fix this thing. But anyway, it doesn't matter. The time that I filled this Excel, the IWM was trading on 217 and 8 cents, okay? The strike price, $200. The premium was 2.04. Of course, per share, remember, we need to multiply that by 100. We're selling here one contract. Our delta is 18. And of course, guys, our IVR is 43, which IVP 95. You must know these things here as well. And TastyWorks do provide, okay? But remember, we live and breathe volatility. If you don't sell volatility, my friend, guess what? Not a chance. That's how we make money. Selling expensive volatility. And that's all. And wait for the volatility to come back to its mean. Nothing else. We sell, overexpand, overprice, overexpense volatility. And when it comes back to the mean, to the average price, we close our trades, okay? So the implied volatility rank here is 43. The implied volatility percentile, 95. That's our broker requirement. And this thing here is filled automatically for you, okay? Don't need to, those blue cells here, you don't need to touch. Okay, as you guys can see here, automatically formulate for us 42 DTE, which it is entry minus expiration date, and already formulate trade number 1. And here gave us the assignment cost, which is the cost of to buy 100 shares of this price here minus our P, which is our premium. The trade was filled. That's how much we got in terms of dollar value of our premium. And here, guys, just a few things here I put here, but I'm going to make this spreadsheet even better, okay? So if you download this thing now, you'll be receiving your email the update version of this. This is just a small part of my big Excel spreadsheet, my trading log, my trading journal, by the way. This is our dollar premium. This is the break even, which it is our strike price of $200 minus our premium. This is the cushion. The cushion means how much the stock has to drop from 217 all the way down to our strike price. It has to drop 8.8%. It's not bad. It's not bad for the IWM trading pretty much at the all-time high. That's not too bad, okay? And of course, 1.2% in terms of reduction of the strike price, which it is 200 minus this premium here, okay? So now, the main thing, in my point of view, anyone or everyone should take consideration, guys, is this. If I collect, okay, this premium here, guys, I'm going to get 1.03 ROR. No, thank you very much. With annualized rate of return of 8.6. That's just not enough. Okay, I need to make at least 15% on my trades. My goal it is, I always said to you guys, to make this. Okay, actually, let me put it back. 12 to 15% per year. Why? Because if I get 1% per month, okay? Yeah, I know. You might think that's too bad or too low, but it's true. If I get 1% per month or 12% per year, or even better than this, I'll be over the moon. I'll be very, very happy. But 1% is not too good, because if I have a $10,000 account, I'm gonna make $1,000 per year. Doesn't change my life. Yes, it's because your trading account is too small. Keep pumping your account, because if you do not know how to get 1% of $1,000 account, you're never gonna get 1% out of $1 million account. That ain't gonna happen, because the trade is the same, the risk management is the same, the everything is the same. The only thing we change here is the dollar value. Okay, making 10% on $1,000 account or $3 million account, guys. The procedure, the process, the method, the approach, it doesn't change. Okay, so in this case, 1% per month, it's a lot. It's a lot of money. If you get 10%, you're pretty much gonna beat the index. If you get this every single year, you should be consider yourself a genius. Okay, so in this case here, for example, if I put my requirement here of, let's say, 8.8, that will be green or blue in this case. Okay, they'll meet my requirement, so I'll press the trigger and open this trade. But because my requirement here, it is 15%, that's red. I'm not opening this trade. No, thank you very much. That ain't gonna happen. Okay, because for me to open this trade, I need to collect here way more premium. In this case here, let's say $3.50. As you guys can see, oh, I can go back here. Let's say, let me see if I can fill on the trade here to make sure it makes sense. One sec. Let me play around here, guys, with the delta of 30. Let me see here, $280 strike price. We're gonna collect here $3.62. Okay, thank you very much. So basically, if you go back here to TastyWorks, so in this case, if we swap here our strike price, okay, from $200 to $208, and collect a mid price here of the bid and the ask, what happened is it's going to give us this outcome here of 15.4, which it is the new strike price of 208 and a premium of 3.6. But our delta here it goes from 18 all the way up to 30. That's fine. But for me to accept this delta of 30, the IWM needs to be at least 10% below the all-time high. Okay, so we can check. Let's say, for example, we go here to trading view. Let's see what's up with the IWM right now. IWM, if you get the all-time high here from November 4th, 2021, okay, and get the measurement here, it's down 11%. Okay, I'm fine. I'm happy with that. Okay, I'm very happy with that. All right, I can get that strike price of $208 and get $3.62 per contract with a delta 30. Why? Because IWM, it is trading, okay, pretty much more than 10% from the all-time high. If it was the all-time high, no, thank you very much. Okay, in this case here, a 30 delta with a product, doesn't matter if it's ETF, stock, that's trading already 10% below the all-time high, that's okay to start with. Because remember, we are going to get a sign eventually, and we're going to start to manage this thing here and start to lower our base cost. Like happened here, we managed our trades here. Guess what? We made a lot of money on IWM since November, when J. Powell pretty much said to everyone that he was going to stop to raise rate. Okay, but anyway, you guys get the point. And don't forget, I'm going to make this available to you guys as well, which is this trading view indicator, which tell us the percentage. We can put this whatever how much we want, and tell us the price that we're going to sell our cash secure puts. Okay, very, very crucial. But anyway, going back here to our trade simulation. So this number here, guys, it is very crucial. Okay, you need to make your threshold. In my case here, it's 15%. If you say, look, I want to get 30%, you might have to trade stocks. Because on ETFs, you're going to find very hard to get 30% annualized on a delta, let's say, of 18, 20, 25, and sometimes even 30 deltas. you're not gonna get the 15% unless if your threshold or your initial requirement annualized rate of return in a cash secure put might be 10% or 8%. Something like that. If you want to just beat the index, you can put this input here to be 8%. Like here, for example, if I go back here, okay, let's go back here. Let me see something here, guys. Okay, here we go. Right, remember we have our $200 strike price at the beginning, our 2.04 premium, and didn't meet our requirement. But the index pretty much returns 7 to 8% annualized per year return. Here you go. If you just want to beat the index, this trade here, guys, I'm happy with that. Very, very happy. But that's not my goal. My goal is between, like I said to you guys, 12 to 15%, okay? And like I said to you before, all these things, it is, guys, in this PDF. All the trades, everything. And also I explain to you guys here, in this thing here, what these things means. Like the ticker symbol, the IVR, the bid and the ask right now, the expiration date, how many days to expire, the strike price, the bid and ask mid price that we need to get filled with. This is our deltas, buy requirement, maximum loss, maximum PNL, our premium, our theta per day, our pop, and of course, our option chain things, which is, you need to understand, which it is one short put, the date they're going to expire, how many days to get there, and your strike price, and you sell to open. Okay, you need to learn those kind of things, and you can get in this PDF here as well. Okay, but anyway, this is what I want to explain to you guys. Very, very crucial that you do understand. Okay, whatever spreadsheet or Google Sheet, whatever trading journal, if you write this thing on a piece of paper, I think having here, guys, let's say an initial requirement for you to open your trades to make it worth. Otherwise, it's not worth to have here, let's say, $2,654 tied up on a trade if you don't get enough return. It doesn't make sense. That's why sometimes one of the pitfalls, or let's say the disadvantage of the cash secure put, it is to have this buying power here locked in for the trade. And this is pretty much the margin of a account, because if you have a cash account, this will be way, way more. Okay, and if you get a sign, if you're gonna hold almost $20,000 of stocks, you need to make sure you get here enough annualized return on this trade. Okay, very, very crucial. And by the way, like I said to you guys, I'm going to improve this thing here way more. And if you download this thing here, the next time I do improve, I'm gonna be sending you guys again the improved version of this spreadsheet. But anyway, in a nutshell, that's what I would like to explain to you guys today, which it is a cash secure put trade entry simulation. How to simulate your trades before you enter to make sure if it is worth pressing the trigger. Otherwise, guys, no, thank you very much. I'll pass the trade. Remember, sometimes the best trade to do is just know to trade. In this case here, if I put back my requirement here of 15%, I will even put my lower level, which it is 12%. No, thank you very much. The best trade for me in this case here, it is not to trade this thing here. Because remember, the best trade management, it is before we press the trigger and not after we press the trigger. And that's why in this case here, I will be not placing the trade here with these input parameters, unless if we change the strike price, collect more premium, increasing our deltas. Okay, that's the way it is. Because in this case, we are going to get a little bit more close here to the stock price, and that's our strike price. We're going to have to be more close here for us to collect enough premium. This is what I always say to guys, okay? Look at this. You need to understand this thing here. Okay? You need to understand this thing. If you don't know this thing here, don't even bother, okay, to trade options, right? Because remember, our goal, it is to put our strike price at the end of the tail here, okay? All the way in here. Not here, not here, not here, not here. But these two here, lower volatility, medium volatility, very high volatility. Here, we sell put like there's no tomorrow. Because why? We collect here, guys, $1. We collect here $1, we collect here $1. Where do you rather to put your strike price? At the end of the tail here of this bell curve, or all the way here very close to the stock price, which is right now. If this here is 100, do you rather to put your short put, let's say 150, or do you want to put your short put at 110, or 120, or 130? all this collecting $1. So you guys make your own conclusion, okay? So we need to live and breathe volatility, and at the same time having here our entry requirement for each trade. And the only reason we're going to get this thing here to pretty much get into our entry requirement, which 10, 12, 15, if we take advantage of those high implied volatility times. In other words, when the market, guys, pretty much selling off. That's the way it is. Thank you very much. Don't forget, if you want to learn how to trade options, everything in our channel, if you want to download this thing here, the link will be in the description of this video. The only thing you guys can get back to us in terms of support, it is by subscribing to the channel, leaving your comments below, leaving your feedback. I'll be much appreciate to hear from you guys what you have to say in terms of our content. And if you want to receive these, guys, to your inbox, the best thing to do, it is to subscribe with the link below at the description of this video, okay? I do appreciate you guys have watched all this video. I wish all of you all over the world all the best. Stay safe and happy investing.